I guess we acquired some duplexes subject to last week. And approximately 48 hours later, we received some nice correspondence from the lender that they were calling their loan due for these 3 properties. It's a $586,000 loan for these 3 duplexes that we are now working to get refinanced out. What's going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. Today is Wednesday. It's the Mike and Dan Show. This is the show where I, Mike DeHaan, and my co-host here, Dan Austin, talk about real estate investing, wealth, and whatever else we feel like for the week. And if this is your first time to Collecting Keys, this is the show where we talk about how to make massive income, not just passive income through real estate investing. And, because people don't realize that real estate doesn't have to be a get rich slow game. You can make a lot of money in this if you want to. There's a reason that you see a lot of real estate bros on Instagram these days. It's because it's not that complicated to figure it out if you just kind of put your head down and put in the work.
Would I be considered a real estate bro?
Dude, sometimes we get there. It is slightly worrisome, honestly.
We have had long conversations about this.
You really try not to be, but there's like certain things that just, come up every so often. I don't know. I feel like we don't do a lot of the typical real estate bro stuff. We're not playing golf on like a Tuesday morning and taking pictures of having our friend take a picture of us on the phone on the golf course and being like, deals never stop, baby.
Rise and grind. Don't worry. We're out here working for you, our clients. Sounds terrible.
Doing deals on a boat, hashtag real estate life.
It's like my worst one. That is some cringe. Like it's real estate brokers, like that was like now we're stepping in the broker world because they're easier to make fun of. But like that was like all of like 21 and the first half of 22, and now it's just crickets. And now all you hear is like date the rate, buy the home. You're like, you guys have nothing. You guys aren't even like grinding out there anymore.
I know. What's like you used to be in a boat. Now is that a studio apartment?
Exactly.
Like, where are you?
Exactly. I mean, we're making fun of brokers, but that's also most real estate investors right now.
It is.
Anybody that's transactional focused, like lenders and loan brokers too, it's tough because transactions have slowed down and everybody's just fighting for stuff. You know what I mean? And so it's like, it's tough, but you got to, if you're going to be in the game long term, you got to do something.
Yeah. Well, I mean, that's the great thing about investing, right? Is if you learn how to identify opportunity and you do in fact keep assets for yourself with that kind of a long-term vision, or you do buy stuff at a hefty discount, which you should be doing as an investor, there's really no reason you can't make money in any market, even like right now when it's slowed down a little bit versus 2021 when stuff was on fire. Versus a realtor, it is very hard to be making a lot of money right now just because there isn't a ton of transactions, and transactions are taking taking a lot longer than they were.
Totally.
And there's
you list a house and it could be 90 120 180 days before you see any money out of that thing. And so it's a long transaction cycle, and it's one of those things too that actually is a thing in like, we're not in like the realtor space, but like that's where they always try to coach these new people like, hey, take your commissions when it's good, when the market's great and everybody's making $300,000-$400,000 a year in commissions, and invest that into your passive income so that you can stay in the game long enough to hit that next upward cycle. And that's how you make the wealth in anything, is like you can take your massive income, invest it so you have passive income in the low troughs, and then you're back in the game when it's high again.
Yeah, see, that would be the smart thing to do. Instead, they go, I'm investing in a boat. I'm investing in getting a tit job. And I'm going to go out. I'm investing in my marketing for my future real estate brand. And it's like, you tell yourself whatever you want.
Got to get that suit, dog.
It's not going to work. Yeah, I'm buying the $20,000 suit and the nice car. I got to look the part if you're going to be in the real estate game. My favorite is when you get those guys and they're like, if people are going to like trust me with these, I need to look the part. I'm like, bro, you sell $200,000 houses in Spokane, Washington. Like no one wants that at all.
Exactly. Nobody needs to trust you right now.
No, I mean if you're in Newport Beach, absolutely have the $20,000 suit and like the sports car, because when you're selling a $5 million house, that is kind of
that's what they expect. They don't want to be having you show up in your Toyota Camry.
Right?
They want to know that they can talk to you eye to eye.
Yeah, then they kind of get each other, and imagine those circles as well in that sort of price point house are probably really, really small. So probably helps if you like can, network with that crowd. But anyways,
absolutely,
we digress. We have some super fun drama that I'm very
breaking
excited
news
to talk about. Some breaking news. So as you all know, if you're in the real estate investment space, subject to mortgages or I guess subject to transactions rather are all the rage right now. There is people out there, one in particular, Space Porby, whatever his name is,
rhymes with Shmish Morby.
Shmish Morby, who likes to go around and talk about all these subject to transactions where you can buy houses basically for free. You can just quit claim the property into your name, take over the mortgage, inherit these super low rates. And that's how you're supposed to get deals right now. All well and good, perfectly valid concept. But as he likes to say, it is extremely low risk. And this thing that exists called the due on sale clause, which allows lenders to call in their loans due if there is a change of title. You don't have to worry about that because lenders never call it. He said in the thousands of deals he's done, it's only happened like once or twice.
I think one time he even claimed to have due on sale clause insurance, which, by the way, does not exist. I think he said that on a podcast.
Oh, dude, everything he says
bigger pockets.
He did this. I saw his video the other day. I think it was yesterday. And he was talking about like the power of meetups. He's like saying this to other people. And he's like, I was at a meetup. I turned to this one guy and I said, what do you need right now? And he's like, I'm trying to do this development. I need $1 million to complete it. And he goes, okay. And so I turned to my left and I talked to this guy and I said, what do you need right now? And he's like, I have $1 million. I need to figure out what to do with it. And I introduced them to each other. I'm like, get the fuck out of here. That did not happen.
Definitely did not happen. Most of the meetups I go to, people don't have $1 million. And that's why they're at the meetup.
Exactly. Yeah. But anyway, complete digression. But this due on sale clause, we bought some duplexes. I guess we acquired some duplexes subject to last week. And approximately 48 hours later, we received some nice correspondence from the lender that they were calling their loan due for these 3 properties. And, it is December at time of recording. But basically, we bought these properties doing the full process with these subject twos, which you can learn about how to do it the correct way if you go to collectingkeys.com/sub2. We have a little course we put together about how you're supposed to structure these deals to protect yourself and to protect the seller. We went through all that exactly as it's in that course. We got through. It's a DSCR lender, so basically an investment grade lender. They typically hold more of their loans on the books, do different things. My hypothesis is that end of the year, they were probably doing their auditing on all their loans. They saw the title change. They called us. They basically saw the new LLC. They looked us up because LLC.
They definitely saw our LLC name and were like, "What the fuck?"
They probably did, but they figured out who we were. They called us, wanted to know the situation. I'm not trying to commit fraud, so we didn't try to lie that we were connected to the previous owner.
There's no point in lying.
There's no point in lying. That is literally a great way to go to jail.
Yeah.
So we
told
them
that we had,
not make it easy. So we told them we bought these properties, received an email the next day saying that they're calling their loan due at the end of the month. And so it's a $586,000 loan for these 3 duplexes that we are now working to get refinanced out. And it's been an interesting ordeal because the first response that I had back, the guy who emailed us, he was one of the partners, and said that total dork, that the loan agreement has been violated and they will be calling the loan due.
30 days. They said they
30 days. Yeah, I responded back and said gotcha, we understand. Is there any way that we can get approved for the loan with you? Just basically assume it, do all these different things. We had a bunch of back and forth. The guy was totally non-committal and freaking drove me crazy for the past week. And then finally today they said, no, they're not going to allow it. They would rather just get paid off. So we are working with a different lender to get the loan going.
Which is interesting because their business is loan origination. So you would think that they would want to make the money because they're going to get paid off either way. And even sharing with them hey, we've done hundreds of transactions. We're not just some schmuck that listened to a course online and trying to go sub 2. We're willing to work with you guys. Let's do it. And they're just, I don't know. They're kind of just, and that's what I've always kind of theorized with this is there can be one person inside of a bank or an institution that just says, I'm going to be the hard dick on this and you're this. And so, you get made the example.
And they totally could, right? If you think about the complexity of what that would take for a bank to do an investigation like that, it would not be very hard. All they'd have to do is, get their entire sheet of their loans, go through and you could pay a VA to do this. They like
Totally.
Wells Fargo could freaking go on Fiverr and
Right.
hire a $5 an hour VA to go through and check every single loan, the title of the loan versus who is, actually tied to the loan itself, right? The loan,
Totally.
tied to the loan versus tied to the property. And anyone that's different, they just flag it and they give them a call.
Yeah, exactly.
Right. And that's something that very theoretically could happen. And I think that the fact that this happened so quickly is a great example of what could potentially start happening here in the future. And we are fortunate in the way that we are able to, we have lender connections. We're able to move this relatively quickly. One of the interesting situations that we have realized we're going to face here is that most lenders, they have seasoning requirements for refinances. So a lot of people may be thinking in the situation, okay, that's great. I'm going to just go get a refinance for the loan amount that I'm inheriting. No, because if we haven't owned it for 90 days, okay, or 6 months with some lenders, so other lenders are not letting us refinance right now. Basically, they're making us do what's called a delayed purchase loan, where they are refinancing it as if we had purchased it. And since we didn't put any money down on these properties, they are making us bring 10% down on this purchase, which is like 60 grand.
Yeah.
So if we were newbies that didn't just happen to have $60,000 lying around, we'd be in big freaking trouble right now.
So if you had no money and you were going to go and do a sub 2 deal, because that's how you do real estate with no money, you really just put yourself into a bind. And I think the key thing to note here is like when you're doing these types of transactions, the more complex they are and the more risk that typically the more risky they are. And with that additional risk, you just need to understand like what your reserves need to be like and how you need to operate around that. Because like there's guys out there that are out there picking up 10, 12 properties all on subject to. Now, if your whole portfolio is based around that, good for you for even being able to find that many deals like that are sub 2 capable that are I'm assuming those are deals if you own them. But really like that is super risky because even if one of those gets called or 2 or 3, you're really big trouble. Now the risk is still relatively low, but as we're showing and explaining, we're people doing real estate investing, real transactions. We're always super candid and open on what's going on in our business. And you're seeing this happen in real time with us. So it's definitely possible. And it's not like we're the needle in the haystack, right? It's just definitely possible. It probably happens more often than people know. And we just have a platform to share it with you.
Yeah. I mean, well, it does happen because you see it even like the free group. And it's funny because I always see those get posted and then the posts just seem to disappear. I'm pretty sure they
delete.
Go and they audit them and they delete them.
Yeah.
But, like if you are finding your own subject to deals, you're trying to negotiate them with sellers. If you're buying these sort of deals from wholesalers or other people, these are realistically things that can happen to you. And it's very important that you have a backup plan. You need to have a backup plan for lenders that you're going to go to. And I say lenders plural because I went through 5 different lenders before I found one that was willing to work with us. And we're fortunate that we have all these different relationships. We've been in the business for a while, that we had options. If you needed to start from scratch, you could be completely up shit's creek in the situation. Right. Also making sure you have some form of liquidity. Even if you are playing the no money down game, you need to have, either a rich family member, a line of credit, your own cash. 401k you can draw on, cash, whatever it is. You need to have that available to bail yourself out. That is a huge thing with cash, right? Cash is it's a way to grow your portfolio and have investment opportunities. It is also a form of security and insurance for when things ultimately go wrong in your business and with your real estate portfolio.
Totally.
Okay. If you don't have liquidity of some form, even if you just have like a rental portfolio, you're not looking to actively buy. If you have no liquidity and something goes wrong, you can get in very big trouble very, very quickly.
And that's where, most people like run into issues is liquidity. When things get tough, money gets tight. And that's honestly like Ponzi schemes. That's why they always fracture because they run out of liquidity. Same thing with everybody else. That's if you're in real estate, especially because it is a capital intensive business, having liquidity in different levers, like doesn't mean you sit on $500K, $1 million in cash. That's a lot of money to be sitting idle, but you should definitely have multiple lines of credits where you can. Obviously, credit cards are good, business credit cards, especially ones that don't have limits that you can use in temporary needs, your own cash. You mentioned 401k, any type of lever, even if it's like 25K here, 50K here, and it all adds up together where you can pull these levers as needed. That is so important. I think for you and I, like that's been one of the ways that we've been able to continue to operate, even when we have shit like this happening. Because not only is this happening, but we also have an investor who has requested to have their money back properly. We knew this was going to happen. We're going to be giving him money back. So we were planning to kind of shift some things around to give him his money back. And then we have this issue, and potentially, who knows, we could have another $100,000 issue within our business or portfolio. We've definitely been doing a lot of renovations on our rental properties that are probably over the next, between 2 months ago and 2 months from now, we're going to be putting $100,000 into our rental properties for various reasons, right? So, we are pulling on these different liquid lines of money to handle this. And if we hadn't done that, one thing could screw you up. One more dollar, if you don't have liquidity, could be the thing that breaks the camel's back.
Yeah. And this is why I think it's so important to have like this massive income component to your business.
Totally.
And so many people, they try to get into like the lean fire real estate game. So, lean fires like the financial independent, retire early, but they have like the lean version, which is basically like I cut all of my expenses and I try to live off of like a very
poor
small amount. And basically
where I grew up, that's called being poor. Honestly,
it's called being poor, but not, too poor to have like just only subsidies. Right. Or whatever. I don't know. But people try to do that with real estate, but the problem is that is just ultimately setting yourself up for disaster. Like you will have problems. And then same with if you were kind of doing 1 foot in, 1 foot out of real estate, and you just have like a standard job that doesn't give you the ability to withstand some of these major financial turbulent situations, you will eventually face a major crisis. Yep. And, and it's funny in hindsight too, I've thought about this. We've bought a lot of like distressed properties from landlords that are like put together people, and you meet them and they're like, they have a job and you're kind of like, why don't they fix the property? Why don't they do this? It's because they didn't have enough freaking money.
Yeah. Yeah. Or they put themselves in a bind. Here's a good example that I always remember this one. We bought a property from an older couple that were retired. They were like school teachers, like did a great, had a great careers, did all sorts of stuff. They retired, they did good. And they moved from Spokane to it was like New York, and they bought a property that had a vineyard on it. Like this is their retirement. So they did that. And then at some point in time, it was time to sell that vineyard, and they put some of that money into a property in Spokane. And then they were moving back to Spokane, and lo and behold, they need to sell this property. So this is a huge chunk of their retirement. They paid like, say, $200,000 for this. I don't know what their complete net worth was, but it wasn't enough, to be like, we're comfortable losing more money. What I mean? And so they sold us the house because they had one rental property, and the tenant stopped paying because of COVID, and he was a dirtbag. And they had, taken what was their dream, sold it, wrapped it into some different investments, and this happened to be one of them, and it failed. That's what happens, right? If you don't have the ability to manage these properties. And they were in a situation where they didn't have a massive income component because they were retired, and they had done this move after they were retired, which is even probably tougher to do if you can't sustain like a storm, so to speak.
Yeah. I mean, and it doesn't matter how nice the properties are that you buy, how careful you are with your underwriting, like how good your property manager is, how well you screen your tenants. There will always be something that happens, just regardless. I mean, I have a new build rental property that I had to put $6,000 into this year because the furnace and the AC unit just died for some reason, right? But the house is like 6 years old. Yeah. A little more than that.
Yeah, we have houses with 20-year furnaces in it. They're still chugging along. You just don't know.
That's exactly the point. You just don't know. Yeah. Right. And it's just interesting to see this. But to have the sub 2-1 come full circle like this, I don't know. It's funny. Yeah. Like
the funny thing is, let me add to this. So we literally just launched our free sub 2 course, like
literally the same day,
the same week, right? And we launched that course because, this was something that we did for our instant investor group. Like we gave it to them first. This was like a while ago, and we decided there's so much crap out there where it's like, pay $10,000 for this course so we can give you a line of bullshit. Not that they're not teaching you how to do sub 2, but they're teaching you how to like a line of bullshit on the back end. So in our course, we just stripped it down to the bare bones and said, here are the major issues with what could go wrong, and here's how to fix it, how to mitigate it, and protect everybody in the transaction, including the seller, right? And so he just launched that because of that. And then lo and behold, you couldn't script this any differently, right? Lo and behold, we have literally a week later something get called due on sale. Yeah. Like, holy shit.
Just crazy. I know. Yeah. And the fact that we've like ripped on that whole movement for so long too.
I know.
And like really talked about, to really talk about like the understated risks and like how
Yes.
overzealous people are to do these kind of deals, and to have one that honestly was pretty cut and dry. Like there's no reason that it should have gotten as weird as it did, but like just like clockwork all came together like that.
We should do like we can append a case study. So like if you go to Collecting Keys, where is it? collectingkeys.com/sub2, and you have until, or are we still limiting it till January 1st?
I think that's the plan right now.
Yeah. So January 1st, it's going to go, only be exclusive access to our instant investor group. So you have to join our group to get it, but we'll give it away for free. If you go and download it now, I think you just put in your email. We will send you like an email when we will append like maybe a 20-minute case study on what happened to us to that course. So you can get that for free, but you got to go get it now. So we have your email. There
you go. That's a good one, actually. And how to actually get out of subject.
How to get out of it. Now that we'll have like a real case study, I guess in a way, it's a good thing for those that are going to go and get that course, because you'll get a real world example of what to do when things go wrong.
Yeah, and not just somebody that's be like, it never happens, and if it does, you just got to buy my subject to insurance for my fake company.
That doesn't exist. Just pay me money.
Yeah.
So we should start that company.
Subject to insurance.
Yeah. But actually not like insure anything. Just call it subject to insurance.
Right. And it's almost like if you have a fake lending company called Flip Funds that you just write fake funds for $20.
Bro. Now you're just being a dick.
But nah, man, like it was interesting, but this is how I also knew that I was a grizzled veteran, because this whole thing panned out and I was just like, God damn it. Like it wasn't like a stressful thing. It's like another thing that we have to deal with. But it's funny. That was one of the biggest sort of comments that people from our mastermind groups had about this, or like people I told that, they're like, are you like freaked out? And I'm like, no, it's just another thing. Right. I don't know. Something you can do about it. There's also too, I was saying to you before the show, I'm super grateful that I have you as like my partner for this, because you're like the only other person I know that's like enough of just like kind of a logical blockhead where you're just like getting emotional about this isn't going to fix anything. So you might as well just be, straight line and honest about the situation. So
I agree. And it also speaks to not just being like a veteran and having things like go wrong to us in this situation, but like just the preparedness that we always have. Like you and I always talk about, like, there's times where we've given up on deals or opportunity that like was right in front of us, where we're like, you know what, like that's pushing too far past where we need to be from a just having the proper levers and ability to pull multiple levers. Because like, as we talked about the different liquidity levers, as you pull on those, you have less to pull. And so we have kind of like this mental bandwidth of limit where we want to stay within, that for some reason you and I have like kind of fallen into the same category. Like we're not like way extreme on anything. Like we kind of like our decision making on that kind of, coincides, even though I tend to be one way and you tend to be another way in different parts of our business. Right. Yeah. So I do think having set up a business such that we're able to weather the storms is key. And a lot of people, when they're talking about all the cool shit they're doing, they either don't have that set up or they're not talking about that. So people kind of get caught up in the storm of like, I just want to be like them and do what they're doing. And then they lose their ass.
Yeah. Which, I mean, it only takes one deal like this to cause major problems for you. Yeah. Right. And that's the reason it's good to be conservative and not just be always doubling down. Is you start to do any sort of scale, you start to take on larger risks. One deal that goes bad can destroy you.
Yeah. Yeah. Honestly. It's important too to like give yourself some profits over time, so you're not just rolling in a lot. It's a bad habit is to continuously roll your profits into your business, and the next thing you know, because if you think, there's a stat out there like most businesses don't make it past 1 year, like small businesses, and then like, or most started, then like most, almost like 90% don't make it past 5 years. So if you just are a statistician, you should recognize that you might not even be in business in 5 years from now. So you should definitely pay yourself something between now and then before that business goes away and you don't have anything to show for it.
I'd be interested to see that stat. Make sure like it didn't include like single person LLCs or things like that, because I feel like it's so easy of a stat to skew, because there's like,
I'm trying to use it for my conversation here. So stop.
Yeah. You're trying to make it your truth. You're trying to do the mainstream media thing where you just influence the statistic.
There is like, but like, if you think about it, because there's so many people too, like business wise, like that start restaurants and stuff like that, that just, they like don't ever make it. Right. You know what I mean? So there is a lot. I think there is something to it, but you're right. The statistic might be a little bit skewed. Yeah. But I guarantee you for wholesalers, it's 99%.
Oh, dude. Most of them don't even get as far as starting an LLC, or even better, they start the LLC, but they never actually market or make any offers. They just shut it down. You deal with a lot of those all the time.
Absolutely, man. I agree.
So anyway, that's our current drama to sort of finish out the year, which has been interesting. It's just something else for the little tool belt, I guess. One more
One more,
life experience. One more
one
thing
more
for
notch on
the
the belt.
real estate bingo card that we
I
talked
know.
about like a month ago.
Some of these, I don't really want these cards. I don't want to have to say bingo on it.
No, yeah, right. Yeah, it's like doom bingo.
Yeah,
it's like
exactly.
bad if you get them. It's
when
all
you
bad.
when you get bingo, you're just screwed. Got the trifecta, baby.
Yeah, trifecta. But cool. Besides that, though, I didn't think we have anything too crazy going on. It's actually been a pretty productive December in terms of like lead flow. I've been surprised at how high our lead flow has been.
I feel like it's like more than usual. Like
for December, it's way more than usual.
Like I'm not like my socks aren't blown off, but also like the quality I feel is good.
Oh yeah, I mean we've been getting a lot of people coming in that are like, and it's funny because it's not even the typical like December, like, oh, I need to sell really quick for taxes. But they're people that are like, hey, I've been sitting on this house as a major problem and now I'm starting to figure it out. What I keep going back to with this, I've been thinking about this a lot, is I think it was JP Morgan Chase. They had like an article that came out. It was over the summer, it's in like August. And they were saying that, if you look at the cash flow and the consumer debt, everyone's like quote unquote COVID savings and reserves, and from all the consumer accounts they can see, we're going to be running out in December. I would imagine we're honestly kind of reaching that because we've been getting a ton of people that are like pre-foreclosures. They have like kind of weird financial stuff going on that they don't always disclose to us until we get to the house, and they're like, actually, I'm declaring bankruptcy. Get a lot of those. And I'm wondering if that's basically just like the timing and the fact that it's Christmas and it's winter is purely just coincidental. And it's really just like the larger economic impact of
I think
kind of
so.
what they were talking about over the summer.
I think there's something to be said about it, right? Because I'm reading an article from the bostonfed.org. I just pulled it up from November 7th, 2023. That just basically says they're gone now. It's gone. Pandemic era excess savings is almost entirely depleted as of November 7th. So JP Morgan Chase actually had a good forecast there, according to your article that you quote existed, and that I don't know if it does, but I feel like I remember that also. So
I heard it on Aaron and Muchstegi's show. I want to say it was like in August because I remember specifically listening to it when I was in Montana over the summer.
Okay, it's fact. If he said it, honestly, it's probably fact.
Dude, he's like one of the few guys that I'll like listen to what he says and not just like kind of question.
By the way, did he go blonde?
I think I
was gonna make a comment on his post. I was like, "Did you go like really interesting article? But did you go blonde?"
I saw that.
Okay, maybe I'll comment next time I see it because I just wasn't sure. I was like, "God damn it, I can't tell." The lighting was kind of weird.
He's kind of a funny guy. Like he likes to like go out and go to concerts and stuff. I'm like, "Is you going to like an Eminem show and you're trying to like look like Marshall Mathers? And what are you doing?"
I love it. I love it. Man.
But anyway, tangent there. But yeah, so I like that's kind of my assumption, and so I'm also assuming that going into next year, stuff might start to get really weird really quick. Because also even some like larger economic indicators that we're starting to see here locally. I don't know if people are seeing the same things other places, but we're having like a lot of restaurants and stuff start to shut down here in town. A lot of like local businesses citing like financial issues and lack of business are starting to, disappear here locally. And I'm kind of assuming that's happening other places too. But like it's just a lot of not a lot of business. Like it's expensive to go out these days with inflation. It's expensive to have a business because of staff costs, rising minimum wage, and different things, and a lot of people just have less money. So I don't know. I do think that we are really going to be going into a true recession here soon. Like
you think so? I don't know. I got to formulate my opinion. My plan is to formulate it over the next couple of weeks and really dive into that because I have people on both sides of this argument that I really trust that are saying opposite things, and it's hard for me to kind of put together right now.
See, I think it's going to be like a consumer-based recession, right? So like people aren't going to be spending a lot of money on luxuries, but I also don't think that there is that many people whose necessities are going to be threatened compared to like past stuff, right? Like you're not going to see a ton of people who are like losing their homes compared to 2008 or the Great Depression, obviously, but you're going to see people doing a lot less discretionary spending.
Right, a big pullback in that. I have understood that, and I do agree with that, like logically, because like they're saying 2023 is more of the business recession, and they'll be the B2B, and they'll be back in 2024. And so from an investment standpoint, you're probably good, right? Like if you want to continue to invest. But yeah, you're right from a consumer standpoint, which could be good for us because then people need to, sell their house. There's a little bit more financial distress there. And this is something that like why inflation hurts people. There's a lot of, damn it, stop.
Did you just see that too?
Yeah, I did. Sorry, that was
finish your thought, then we can bring that up.
Yeah, let me see. I didn't read it fully, but
no, you can finish your thought because it's a good conversation about the economy. Then we'll. Okay. That's just
Sorry. Side note, we got more to come. Anyways, where was I at here? Is that inflation hurts because wages never go up the same amount. It pisses me off. It's frustrating. I get it from a capitalist standpoint, but in like running a corporation standpoint, like give your people as little as possible so you can make more profits, because your profits are truly driven by the market, and you need to make quarterly earnings, and you need to make annual earnings. You have a price per share, your profit per share that you're like giving out, and it needs to be within a bandwidth to your investors. When they see it, they're like, you're too high or too low. They don't reward you if you over earn or under earn, right? They really get upset about that. But if inflation is running over 9%, how can you argue that a no pay raise or a 3% or a 5% pay raise is okay? For most companies, if they're even doing a cost of living increase that's 2 to 3% over the last several years, and they're going to dole out 5% and give you a high five and a good job, like, look, we gave you even more money than usual. But we all know inflation was running really high. And so that's where it really starts to hurt, because if wages can go up with it, then it's fine, which is a great thing for everybody, but also maybe not the best for the economy, because it's continuously, it just feeds the inflation more. But it's just so a frustrating mindset for most Americans, and a reality for most Americans, why the inflation hurts them so much.
Yeah. And there's always this massive misconception, I think, with business owners, that people do that selfishly because they're trying to like steal more money for themselves, which sometimes there's like that, right? I mean, as a business, for sure. But like as a business owner, I'm sorry, but I do deserve to make more money than my employees.
Yes.
Right. Because we have been, doing this thing for 5 years. People regularly ask, like, because people say we've grown our business pretty fast. Like, well, yeah, because I've worked 12 hours a day, 6 to 7 days a week for the last 5 years.
Yes.
Okay. We've put a lot into it. We've done a lot of personal investments, financial investments,
taking a lot of risk,
life sacrifices, a lot of risk, right? A lot of different things. But I do also think there's a hell of a lot of businesses out there that just aren't doing very well, and even though inflation's at 9%, they're probably pushing that profit margin to a point that, they're probably stretching to even have those staff members. They literally can't afford to increase everyone's pay.
Totally.
To keep up with inflation. And that's the reality of small businesses right now. So like, especially if you have some of these lower margin businesses that people do, like restaurants, like coffee shops, I mean, they can only charge so much for a sandwich, right? Before people stop paying for it.
Just on principle. Honestly.
Yeah. Or you can only turn so many cups of coffee in an hour.
Yep.
And after a while, you're going to reach a point where you literally are at like kind of the maximum amount that you can charge, and your staff still has a certain expectation of what they want to get paid. And those become an issue. And the only thing that you can give up at that point is your profit margin. And it's not like, people that own coffee shops are making millions of dollars.
Right. And in some scenarios, you can really, truly put yourself in a position where the small business owner is actually making less. And you would be very surprised. I've been looking at P&Ls of business owners and stuff this last year, and some of them are not making as much money as they're risking, to be honest.
No.
You know what I mean? And so it's tough. It's definitely a weird situation, though, like, because there's a balance in how you can provide jobs, and as well as providing a good environment for your staff to work in and have that, and giving them additional benefits outside of just pay to make it work for you as a small business owner. But really the point of this, for me, the conversation is really like being in a position to be a business owner and an investor is where you want to be, because you want inflation to be on your side. So we argue that as a business owner or as a corporation, the shareholders are driving that. Well, you need to become the shareholder, because shareholders are the one giving money to companies to invest. That's where you want to be. You want to be the shareholder, whether that's of your own business, a shareholder of real estate, of stocks, or whatever your investment choice is, because when inflation goes up, those do go up in value.
Exactly. Yeah. 100%. And just like everything else, I think it's so important to be in charge of your own destiny if you really want to have security.
Totally.
And I made an Instagram post, I think it was last week, a couple of weeks ago, that got a lot of response. But it was kind of a controversial topic where the U.S. is absolutely the land of opportunity. and I acknowledge that. And so many people move to the US because of that. But if you don't want to take that opportunity, you're probably better off living in most other countries.
Yeah, from
Like
a lifestyle standpoint, there could be a lot of other opportunity for people.
For sure. Like if you're someone that just wants to like go to your super basic job that isn't that stressful, and then you want to go home and like, just play your video games or like just, do your crafts or do whatever. The United States is a hard place to live. Like honestly, like you're not gonna be able to afford that many luxuries. Like you'll be able to do some basic stuff, but you're not gonna get a lot of time off. Like
we're a
maternity,
working culture,
parental
right?
stuff sucks. We're a working culture. The healthcare sucks compared to a lot of other places in terms of like cost, not in terms of the actual care that you receive. Because there's a reason that people come to the United States to get surgeries and things, right? But if that's outside of your ability to pay for it, it's outside of your affordability, you probably should go somewhere else. And that's an unfortunate
I heard
truth.
they take longer lunch breaks in Spain. I think that's where I want to go. And they have free healthcare.
Yeah, they do. Yeah, they have the siestas.
Can I drink on my lunch break? That's what I care about. That is frowned upon in the U.S. unless you're a business owner.
You can do that in a lot of places.
Just not in America.
Just not in the States.
Well, I mean, unless you're in construction.
I mean, if you're in construction, you're pouring vodka into your white monster can before you get to the work site.
Damn it. That's rough. My wife and I don't know if you've seen this before, side tangent. So like when we go for walks, like through the entrance into our neighborhood, and there's these like little teeny shooters of like plastic, like vodka bottles. That is like, that's an alcoholic thing, right? Drink it on the way home, throw it out the window. And we're like narrowing it down to who we think might be the alcoholic.
Oh shit. There's probably someone that like walks around your neighborhood and like drinks those.
No, this is totally a person that comes home from work and throws them out the window so their spouse doesn't see that they've been drinking shooters because they're probably not supposed to be drinking.
Take a little mouthwash when they get in the driveway.
Seriously, like so we have like we're like investigating this. We've narrowed it down to a certain area of the neighborhood.
We really shouldn't make jokes about alcoholism. It's fucked up. It's
I'm not joking about it. I'm just saying I'm just trying to track out who the freaking litter bug is.
Yeah. But yeah, especially in your neighborhood. You live in a nice neighborhood.
Bastards.
So anyway, but yeah, what we were joking about before, we were making the joke about the bingo card with the sub 2 getting called, and one of the guys in our mastermind, Dan Del Corio out of Dallas.
Milk.
He it goes by Milk. He posted, said, "Is there a bingo card for making friends with a bird on a house walk?" And it's a picture of him with this little bird on his shoulder. I don't even, dude, the things that happen in this business are just like, what is the context?
Right.
Well, we'll have to report back next week and let you guys
Dude,
know.
seriously, I'll post this photo. Somebody sent me a photo of them walking a property where there's 2 toilets side by side. And I was like, why is this so common? Like, why are there like when in off-market real estate? Like, I'm not even surprised. I'm like, oh, 2 toilets. Yeah, that's most bathrooms.
Yeah, I don't know, man. But yeah, he's just hanging out with a bird, and it's funny because Dan's like a big dude. He's kind of like a man's man. Here he's hanging out with this little bird.
Little parakeet.
Like,
I think it's a parakeet. I don't know.
Yeah, I think so.
I hate birds, man. My mom used to like birds growing up. I hate them. Like chirping in the house. Ooh.
Well, yeah, those are obnoxious. But tell you what, owls are freaking cool. Dude.
Owls are cool, but they're super scary. When I held those
owls in Japan, freaking scary, dude. I was waiting for it to kill me.
Those are cute ones, though. Like,
I have a big one.
Did they have the big claws?
In the world. Yeah.
What kind of owl is that? The biggest owl in the world?
It's the second biggest. It's like the Eurasian owl.
Like what? Like 2 feet tall?
Dude, I mean, look. Yeah, I'll send you the picture. It's on my Instagram. Dude, it's like bigger than my head. Like it's massive, and I had it on my shoulder.
I mean, I've seen the owls like even around my house. I've seen them flying around at night, and they're like their wingspan is like huge.
Yeah,
they're scary.
They're massive. The big one's like 6 to 8 feet. But yeah, this one has a 6-foot wingspan, and you could like hold it. But they're funny. They're really light because they're birds. But it could definitely like buck you up if it was upset. Anyway, we're off in the gutter.
Sorry.
Right on, guys. Well, I think that's all that we have for you today. We should make these bingo cards, though. I feel like there's a lot of random things we could.
We should. Oh, that's a great idea. Let's do it.
What we should do is we should have a competition. Okay, we can make these bingo cards, and the first person to get like a bingo or like a blackout, and they can send like photo evidence of each one, will send like $1,000 or something.
I like it, dude. Some sort of competition.
Yeah. Or what we do, let's say you buy a bingo card for like $5, and whoever completes it first with photo evidence, get like the pool of like all the people that did it.
Gets the pool. I like that idea.
Yeah. So we should explore this. I think
I like this. All right. Let's get our guy on it.
Bingo.
Wholesaler bingo. Dude. Okay, I'm into it. Let's go.
Perfect. Yeah. Awesome. Cool, guys. But look out for Wholesaler Bingo coming to a Collecting Keys podcast near you.
That's so funny.
But Thanks for listening, everybody. We appreciate it. If you want to get our free Subject to course, which you will be able to get until January 1st, 2024, where you can learn how to protect yourself so that when your Subject to transaction that you bought that you thought you were being so smart about gets called, just like ours did, that you're not in a bad spot. You can go to collectingkeys.com/sub2 and you can grab that. And it's like 45 minutes, but we've been getting some good feedback on it so far.
Yeah.
And it will give you everything you need to know to do those transactions correctly. Besides that, everybody should follow me on Instagram at Mike_invest and follow Dan at InvestorManDan. And talk to you later.
See ya.
Thanks, everybody.